answering your questions about retirement. It's Money Talk with Michael Eastham.
I want to reduce my risk now that I'm 60. I won't retire for another 5 to 6 years though. How much should I put into more conservative bond funds?
The amount of money that you should put into more conservative bond funds is a good question. Here's the thing that you need to consider when you're talking about bond funds. First of all, you need to understand the difference between bonds, individual bonds, or bond funds. And most people have a misconception about the term bonds. Now, bonds generally can reduce your risk if you use the right types of bonds. However, if you invest in individual bonds, then you have two very important contracts with the issuer of those bonds. Number one, you have a contract for an interest payment. In other words, they're going to pay you interest in true cash throughout the life of that bond. And then the second contract that you have is when that bond matures, that you're going to have you're going to get your principal back, assuming there's no default. That's called a maturity. When the bond matures, it's a maturity date. You get your money back, you can go invest it elsewhere. Now, when you compare that to a bond fund is really, by definition, just the stock of a company that owns bonds. It's not really you owning those bonds. So what does that mean? Number one, it sounds more risky because you're owning the stock of a company that owns bonds. And number two, those two contracts that I mentioned just a moment ago, they don't exist if you own the bond funds. You don't have any guarantee of principal. You don't have any guarantee of interest. And as a result, you're basically owning the bonds, the stock of that company that owns the bonds, and your ability to get cash is dependent upon the bond fund manager who's buying and selling bonds on a constant basis. That means that, generally speaking, in order for you to get income from that bond fund, you're going to have to sell shares. And what does that sound like? It sounds a lot like a mutual fund or a common stock. Now, does that mean throw the baby out with the bathwater and that bond funds are no good for anyone? Not at all. Depending on the size of your account and the amount of funds that you can actually allocate to more conservative bonds as a category, you may want to use bond funds just to get diversification. Because if you only have $100,000 in your entire retirement account, well, it may be a little difficult to invest in a diversified portfolio of bonds, of individual bonds on your own. That's where bond funds may come in handy. But if your account is $500,000 or $1 million, then you've got plenty of room to develop a reasonable portfolio of individual bonds, and you can take advantage of some of those contractual guarantees like the fixed predictable interest and then also your principal return when the bond matures. I hope that helps, but of course, as always, reach out, give us a call. I'll be happy to look at your individual situation and help you determine what the right mix in your portfolio is as you head into your retirement.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.